following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 27th. Yes, it is Turnaround Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be, and I do mean always, pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Not just a great day, but an extraordinary day. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. Hey, folks, we can do that for any instrument, any currency pair, any commodity, any index, any ETF, any stock, anything that you want. Of course, the way that you do that is you give us a call. Now, I'm absolutely grateful for your presence here, but more importantly, I am here to serve you. So pick up that phone, dial on in. Right now, it's not too soon, 877-927-6648. Of course, internationally, 727-445-1044. That's how you would reach out and get a hold of us. Of course, you can send me an email, steve@tfnn.com. I'll do my best to respond to all of those emails during the show. And, of course, inside the Tiger's Den, an instant message is the best way to do that as well. So let's go ahead and get this show started on terrific Turnaround Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow is trading up 127 points. She's trading out at 18223. S&P is up 13 points, trading at 2159. NASDAQ Composite up 40 points, trading at 5297. Russell 2000 up 4 points. She's trading at 1245. Gold is back $13. Silver is back 42 cents. Light sweet crude is off about $1, trading out at 44.97. Leading the charge, drum roll Johnny. That is leading the charge the upside. It is Amazon, $15.84. Is that at a new all-time high again? I believe that it is. You've got AutoZone up $14, nearly 2%. Intuitive Surgical up $10. That's trading out at $7.17. Google's up $10. Regeneron Pharmaceuticals up $7. Alta Salon up $5. To the downside, you've got Ligand Pharmaceuticals, LGND, off about 10.5%, down nearly 12, as I say. Fact Set Research down about $10. You've got United Therapeutics off 5. Carter Inc. down 450. We do have some requests that have already come in, so we'll get to those in just a few minutes here. We've got requests to take a look at the DSLV, the JDST, the GDX, shorting Mosaic, MOS, and shorting the Qs right now. In order to answer all those questions, though, what we have to go determine is what is the market communicating to you and I at 1 o'clock? More importantly, what are the numbers that we need to watch for at today's close? Because we'll take a look at what's going on intraday. We'll take a look at the day's close, which will be really important and perhaps very important to be able to answer that question, should you short the Qs now? Of course, now is different than 4 o'clock in the afternoon. But if you short it now, I'll show you what to be paying attention to that you may want to close out that trade if, in fact, you're shorting it, or that it gives you the confirmation that now was the right time to fire away. So where should we begin? I'm the one that's in control of the show here, so I should know where to begin. However, there's a lot of things to really pull together. First, let's take a look at today's action. The meaning of today's action, a couple of different things out here. Number one, is there anything that has actually transpired today, and this is for listeners who have been listening for a while, is there anything, those of you, because you know this game. You know this game better than most, and that's a beautiful thing out here. So is there anything about today's action that you would not or could not have anticipated after yesterday's action? Answer that question for yourself because you know the answer. You know the answer is no. You anticipated that this could be today's move. Why did you anticipate this? For really the new listeners out there, and we hope that we get new listeners each and every day. And I hope that you do your, and I hate using this term, fair share. What the heck is a fair share? I just hope that you, from time to time, tell somebody about the shows here at TFNN. That's how we grow. And, if you're not growing, yeah, exactly. You're dying out there, and we don't want to be dying. But you and I knew yesterday, and we talked about this, or I talked about this during the show. We knew that if the VIX index, when the VIX index closes higher by 10% or more, in a single trading session, and which it did yesterday. Yesterday's VIX close was 17.98% to be exact, that you have a high degree of probability. I don't know why I did the old railroad tracks here, but there is a high degree of probability that you're going to see a bounce or a bottom in the market. It rarely lets us down. Sometimes it takes 48 hours, and certainly we saw that initial impulse move last night, but that was actually caused by something else, referring to the futures market out here. And I'll show you what that is, too, because we have to respect that, which I will show you, as much as we have to respect a one-day rate of change greater than 10%. And that is what happens here. Sometimes it can be an exhaustive move, by the way. That's what causes it, so much energy to move to the downside. And let's face it, yesterday was with basically zero. I do mean zero volume on the way to the downside out there. Now, the caveat yesterday that we talked about was one caveat, not caviar, but caveat. And that caveat was what were going to be the results of the debate. Yeah, you knew what I was going to say out there. I was just giving you the reason that we wanted to go ahead and take a look at that was for this purpose. And that is a slideshow. Do it from this current slide. That's because of this chart right here. Because what we do know, look, folks, patterns exist all the time in all different things out there. I promise you, you have a pattern. You probably wake up about the same time. You probably go to sleep around the same time. You probably eat dinner around the same time, lunch around the same time, breakfast around the same time. Many of you eat the same things on the same day or every week and so forth. You have a pattern out there. You know which leg goes in, for those of you that wear pants, you know which leg goes in first. You have a pattern out there. When you tie your shoes, you know which shoe you tie first. You probably put your socks on. For those of you that wear socks in Florida, we don't wear socks. Well, when we go work out and go do our running and jogging and so forth, it is advisable to wear socks. Unless you are running in the water, I like to run in the water out there, but that's neither here nor there. The bottom line is patterns exist everywhere. And there's patterns here that said, well, okay, let's take a look at this, because whoever wins the debate, not because of the news media or some, I was going to use bone something out there, but really because of the way the market responds. That's what I'm interested in. Isn't it really what you're interested in? I don't really care what somebody at Fox, CNN, you name it. I don't really care what they say. I want to know what the market says. I want to understand the pattern of the market. And we'll have to talk about that when we come back from this breakout here. But it's very simple. This market says that if a Democrat, if the office of the president passes from one Dem to the next Dem, the markets move up into the third week of October. Or if it goes from Dem to Republican, the markets move down. They're not moving down exactly. But we'll take a look at this when we get back from this break. Steve Rhodes with TFNN. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So before we went to that break out there, we were really taking a look at this chart out here. And as we take a look at this chart, the top portion of this chart shows when there's a handoff from a Democrat to a Democrat. We don't really need to be paying attention to Republican because that can't happen out here. So the only two options when we take a look at cycles out here are the top pattern, the top cycle out here, the top chart out here, or panel number 2 at the bottom where it goes from a Democrat to a Republican. Now, the typical pattern when the latter occurs, the market moves down into about the third week in October out here. And there is still a little bit of a possibility that is in place. One thing is most certain. Maybe we don't know exactly where we're at with regard to September 27th. But come the middle of October, come the third week in October, the market will be speaking. It'll be squawking, walking, and talking, as Tom likes to say. And you'll know before any ballot is cast what the ballot of the markets are and who they say is going to go ahead and take office out there. So with regard to today's action out here, one thing that we know for sure when we take a look at the combination of that one-day rate of change, that today's action is normal. Now, the question becomes, with regard to individuals who ask the question, hey, is now the time to go ahead and short the Qs? Well, it is the NDX 100 that is the strong indice out here. If we take a look at it, we can look at it on many different time frames out here, but let's take a look at the 30-minute time frame, because on the 30-minute time frame, as the market was moving lower last night into about 8:30, that's right here on this candle session that we're taking a look at. By 9:30, 1 hour later, right, half an hour into last night's, and did it have anything to do with? Doesn't really matter. We don't. I can tell you, you and I are going to look at charts. We're not going to remember what happened at one time on those charts when we look for reversal patterns. What we are going to look for are reversal patterns that matter. When price moves lower, does it with less relative energy, and the cavalry arrives, and we define the cavalry as, in this case here, a bullish reversal signal. It is simple. It is unequivocal what you can anticipate. In this case here, price will move to higher levels. You've got to be able to identify where those levels are, where you can find resistance. You and I can do that just simply because of different pattern recognition tools that we use. So we know that is an important bottom inside of the NQ. Now, there's no reason for us to do an A to B equals CD because we saw price here coming down into the 9:30, 10 o'clock session we know that price was moving lower into it. And by goodness out here, can you say by goodness? My goodness, we can say that is a wide-ranging bar as price came back into a level of support that was tested last night. So where does that take us to? Well, where it takes us to with regard to the NQ, it takes us really to the daily chart, right? This is going to help our listener, our viewer, with regard to forming an opinion on the NQ. Because today it's really important to take a look at Stevie's and yours oscillator unchanged line. That is the red line that is on my chart out here. If, Mitch, price closes back below that oscillator unchanged line, and you are so inclined to take a short, that is its message. 48.46, 48.48.13, 48.48.09 right now. We'll just call it the 48.48. If you see a close below that, right, you will have a rejection of resistance. That will be its message. What you're going to have to then evaluate is say, well, hold on a minute, Steve-O. I see that price is moving back into that swing point from the trading session of September 22nd. And as you know, even if we have rejection, if you move into a swing point with volume out there, even if you have a rejection, it says you're going to go ahead and move higher. Now, we could do this by going and taking a look at the Qs. The problem here, Mitch, is we're not going to get that same piece of information. So which is it that's more important? The NQ, the futures contract, or is it the ETF? I will tell you, you can take those ETFs and you can throw them out the door with regard to the meaning that is behind them, with regard to volume, schmolium, everything else that's out here. I say pay attention to this chart out here. Nonetheless, I could be wrong, although I don't think so in this matter, but we'll take a look at those levels out here, QQQ, because I'm telling you, folks, if you were going to go ahead and trade those ETFs based on volumes and patterns out there, you would be doing the right thing at the wrong time and get crushed out here. They just have been inconsistent. If they were consistent, I would be sounding the horn and telling you to focus and pay attention to those, but they are just simply absolutely inconsistent. They're basically old news. If you're going to make a trading decision come tomorrow morning based on what took place last night, don't. Instead, subscribe to a newsletter service that'll tell you exactly what's going on as of this moment, like 8 o'clock when my newsletter service goes out, so that you can make a more informed decision out there. Because there is so much more price discovery that is going on between 4 o'clock and between 9 o'clock or 8 o'clock or 9:30 when you're making a trade decision out there that you can't go with in this day and age. For all of you, and that basically includes all of you, that pay attention to this little device out here to play games or be in communication with someone, Facebook, whatever in the heck that is. I'm not a Facebooker, but nonetheless, if you are, you are. That's okay. But you pay attention to this device, do you not? And you're basically paying attention to it 24/7. It's paying attention to you, whether you're paying attention to it. So why wouldn't you do the same thing with regard to the stock market out here? That means you don't have to trade the futures contracts. But by goodness, you better understand the patterns that are going on out there, because there's just too much information that if you decide to trade without it, you're flying blind. I don't want you flying blind. With regard to the Qs out here, Mitch, and this is for you, in the case of the QQQ, it looks like well, I'll tell you what it is exactly. I just have to put up the data panel. So I'll put up the data panel. I just have to remember where the heck is that? Is that it right here? No, that's not it. Is this it? Yeah, show data box. There we go. It's off my screen, but it's on another screen. The number is 118.23. It's right at 118.36. So what I can say to you, Mitch, is that, look, it would be a failure today at 4 p.m. if you see it close below 118.23. Now, let's go take a look at volumes this here, because you can see we're not trading into the swing point out here. September 23rd, we are inside the NQ. We're not inside of the QQQ series out here. But let's go take a look at it. And, hey, with Amazon being one of the top 5 holdings out here, that thing's at all-time highs out here, and that says it can go higher. Volume today inside the Qs at 125 is 11 million shares. 11 million shares out here, in essence, going into 22 million shares. So, look, it's going up on light volume. Yesterday was a downdraft with 16. It could be about the same, though. 11. So yesterday, and I said yesterday was dismal. Did I say it was dismal? Yeah, I did. I said it was dismal out there. If we take a look at what does that mean? It's 125, so that's close enough. So we'll say 12 million by 1:30 out here, and 1:30 would be 4 hours into the trading session. It says it's 19.5 million shares. So if you were really enthused with regard to the market moving lower yesterday, creating island tops in some of these index ETFs out here, the Qs moved lower with 16 million shares. It looks to me like it's going to do 19.5 million shares today. You know what that says? That says you could actually be setting up an A to B equals CD to the upside inside the Qs. Use that oscillator unchanged number, though, as one of your bailiwicks. By the way, if we take a look at on the Qs, our TAS market profiles out here, you can see that the high on a daily basis, 118.21, there's another number for you, and 118.01 is the weekly basis. You close above that, oscillator and change line. The message is not to go short. Now, that message could change overnight. It could change at 3:30 in the morning, depending on the pattern setup that takes place in the equity futures market. Now, when we get back from this breakout here, well, I'm not sure what we're going to do. We might have a caller. We might have something I need to go take a look at. But at some point in time here, we'll get to a couple of things. I want to take a look at the long-term picture with you. I want you to understand the extraordinary opportunity that's going to be coming in the next few weeks to a screen near you. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We've got two callers on the line, so let's go to the first caller. That's John in Philly. John, thanks for calling. Thanks for holding. How are you doing this afternoon?
Steve, I'm very well. Thanks for taking the call.
My pleasure. You want to take a look at corn futures, the December corn futures, I believe. So tell us what you're taking a look at, how I can assist you.
Steve, I wanted to see if you pull up the December corn. That would be Zebra Charlie, Zebra 6, I think, for you, and November soybeans, which would be Zebra Sam X6. Steve, the reason I'm calling specifically about these today, I think there's something pivotal right here, right today, in beans, corn, and wheat. And it's very much in keeping with things that you do, always looking for seasonal or cyclic patterns.
Yes.
And whereas you've been guiding us along the way with what the seasonal cycles are saying with regards to stock indices, I'll just share with you this idea that...
And folks, I want you to keep your ears open, because this is a guy that really knows his stuff and really studies. Go ahead. I didn't mean to interrupt, but go ahead. I want to make sure people are listening.
Just to continue, the date October 1st, plus or minus a week, is a very regular pattern in which seasonal price lows in corn and soybean futures are made.
Okay.
It doesn't happen every year, of course, but it's something seasonally that is regular. And interestingly enough, Steve, if you pull up that D's corn chart that I referred to, you will see that today at at a price of 327, we have what appears to be at least a candidate for a perfect ABCD down Gartley buy on the corn contract, making a higher low, 327, versus the contract low down of 315. So that's corn. And then on beans, beans made a new post-summer low today at 934, and we've surged 16 cents up from that. And pattern-wise, once again, candidate, in this particular case, soybeans, not a Gartley buy, but what I call, actually what Jim Flanagan calls a bear trap to a bottom candidate pattern. So I just share those with you and see if you can share with us what your charts and work say on those two particular commodities, please.
Okay, great. So thank you, and thanks for that information, which is really helpful to folks out here. And what I'm going to do, the chart that I'm throwing up on my screen right now, and we'll switch back and forth. This happens to be the continuous contract for soybeans at the moment, and but it would show the same thing if I were to go ahead and put up the current contract. What this shows us at the moment is that price has been moving lower with less relative energy out there, and that oftentimes is the slingshot, just like it was inside the stock market today on 30-minute charts out there that we were looking at during the first or second segment out here. So, and what we look for is we look for some type of bullish reversal signal. Now, you may or may not get a hammer candle today, which would be a nice thing. We already actually have the level of support because price was doing the same thing back on September 1st, even though that was outside of your cycle area. What we do know is with regard to patterns that form bottoms or tops, in this case here, bottoms, we know that we had a nice little morning star reversal signal on September 4th. So that is a bottom-worthy candidate. Today it looks like we have a test, as you say, of that area out here. You'd like to see a close above this little 940. I have to put up this little tool again. The actual level you'd like to see a close above. And I may have a slight delay out here, John. If I do, I apologize. But the number is 940, 981. Because if you see that, that tells us that our price oscillator has gone ahead and has turned up out there, and that would be an indication of a bottom-worthy pattern that is out there. You also, and I know this is one of the counts that you like to pay attention to, at least on the continuous contract, you've got a TD sequential that looks like it's about to form. It looks like today may be that day out there. So I won't know until we see the actual close of today. But with regard to, and the other element that you have, and this is now actually looking at the current contract, is you also have a nice TAS market profile daily low out here. So that is a level of support, and that's priced out at 944.50. So this fits all along with what you are saying with regard to the cycle pattern. It looks to me like you may have it today. Ideally, you'd like to see a hammer candle. That'd just be another indication of a bottom, but price has certainly come into support and done it in a nice way. With regard to corn, if we take a look at the December corn contract out here, I don't have a similar pattern just as the soybeans did with regard to, price moving lower, doing it with less relative energy out there. But what we do have instead, as you have pointed out, we do have a situation where prices come back into a level of support, a slightly higher low than that nice little morning star pattern that occurred between August 30th, 31st, and September 1st out there. And it's coming back into its TAS daily profile low. So as long as price is able, and here's the actual profiles on the daily basis, any move, any close, continued close above 328 out there, which is where you're at right now, that would suggest that price will then move up to 342 and then 356 out there. So along with your cyclical patterns out there, which we want to pay attention to, it looks to me like you have nailed this thing, or very close to.
Hey, Stevie, thanks so much. I'll sign off now. I do appreciate that, and what I hadn't looked at that you just showed on those soybeans was that Tom DeMark count and the signal it's just giving here today. That's very cool.
Yeah, perfect. It's ideal. So, and that's because of you. You're the one that turned me on to that. So I will say I'm very grateful for everything that you've done.
Stevie, thanks for your help.
You bet. Hey, let's go to Alex in Newton, who wants to discuss wave counts. Alex, thanks for holding. How are you doing this afternoon?
I'm doing good. How are you doing, Stevie?
Excellent. Thanks so much for asking. And it doesn't tell me wave counts on which instrument or anything. So tell me what you.
Doesn't matter. Any stock, any index, any futures.
Okay.
You have two wave counts, 1 to 3 to 13, and you use also Basil's count, A, B, C, D, E, F.
Correct.
And so on and so forth. Correct. So how do they always stop out or have hit the bottom at the same time?
No. They're two different sets of signals altogether. Two totally, sometimes you see them where you will get some synergy between different patterns out there. But they're two different independent signals that are identifying different elements. As an example, and I'm going to blow this up on my screen here. Let me do this. Let me do one thing on this since we're live on the show. I'm going to go ahead and change the font size so it turns up to be quite a bit larger. And we're going to be taking a look at the black numbers specifically. I was going to try to do that. I will do that while we're at this break. So, Alex, can I trouble you to hold on through this breakout here?
Absolutely.
Okay, so we come back, folks. We're going to go take a look at, we'll look at the ES Mini. I think we'll look at a 30-minute chart out here. We'll identify one of those patterns, maybe a couple patterns that Alex had called about. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 132, S&P is up 13. We're on the line with Alex in Newton, and he was asking really about a couple of different things. So one, if you take a look at my chart right now, there are several different tools that I use to explore or identify tops or bottoms out here. And one of those patterns that he was asking about, I look at the seventh wave of a Chapman wave count, and I'm only focused on the seventh wave. It is not the Chapman wave system out there. You want to learn how to use the Chapman wave. And the only way to do that is to attend one of Basil's workshops out here. But what I like to focus on is singing in the key of G, Stevie Wonder, and that is taking a look at the seventh wave move. The question was, and another pattern, and we had John from Philly that was on, and he was really the one that had really turned me on to going back and taking a look at Tom DeMark's system. He pays attention to that in many retrospects out there, and I have read that book and read that. And Alex, didn't you just recently read the Tom DeMark book out there?
Yeah, I did.
Yeah, it's one of the more technical books, and I have read it and reread it, and just, and so it might have been easier for you than it was for me, but I went ahead and continued to pick it back up because I was able to create a tool that I could identify those counts on my trading software out here. And so one of the things that I pay attention to are those 9 counts. And those 9 counts, folks, by the way, what they require is they require 9 consecutive. It has to be consecutive counts, either moving to the downside or the upside, where the close of the current bar is, in the case of it moving down, is less than the close of 4 bars preceding. So bar 5 is going to be against bar 2, 6 against, and so forth. So, and you can see that those are numbered on my system. When you get to a 9 count, it doesn't mean that you have a trade. It means, hey, pay attention, because there was a lot of energy, like a sprint out there. And the question is, maybe after that sprint, is it Usain Bolt, who might have more energy left, or is it Steve Rhodes that was making that sprint that says, give me some oxygen. I need to resuscitate out here. The way we determine whether or not the market needs resuscitation is by utilizing Steve's red line, that oscillator unchanged line out there. And so we don't get a reversal signal, in this case here, Alex, when we get to a 9 count. We don't get a reversal signal until we see a close above that level. See, when we got this first 9 count out here, this was yesterday at 1:30, 2 o'clock in the afternoon. Get a 9 count, that doesn't mean take the trade. It does mean you can see the market pause. But pause to do what? Go up and test the level of resistance on a 30-minute basis, goes ahead and makes a beeline, turns right back down. So you don't have a reversal signal. The next 9 count came in here at 6 o'clock in the morning out here, 6 o'clock this morning. We're looking at a 30-minute chart. 26. I take that back. This was 6 o'clock yesterday morning out here. That alone didn't give us a signal, although we did see a close above that red line. So you could actually have gone ahead and taken a trade on this to the long side. Turns out that would have been a losing trade for sure. So that is two patterns. Now, another pattern that you and I pay attention to is price moving higher or lower, in this case here, lower with less relative energy. Well, moving lower with less relative energy doesn't mean anything to me until we actually see the cavalry arrive, till we see a bullish reversal signal. You see, we saw those signals here where price was moving lower, but there was no bullish reversal signal, but there was last night. Now, last night at 9:30 was a resounding bullish signal because it was a wide-ranging bar. Interestingly enough, on the 30-minute chart out here, we can see that what price did was it went up and it made that 9 count out there. Again, not a time to go ahead and take a short. An aggressive trader might do that, but not necessarily the time to take the short, but certainly the time to tell you to pause. Now, what would have given you the signal that said that was likely it for the move was going back to a little bit larger time frame. That larger time frame, Alex, being the daily chart for the ES Mini. Because what we can see out here, and this is irrespective of where we're trading right now, what price actually did last night at about 10, 11, 12, whatever time it was. What time was it? 1 o'clock in the morning. Price had come up and hit my red line. That's that oscillator unchanged line out here, and that held as resistance. So you had really a couple of different patterns that were coming together at the same time. Yes, I also have charts like this one here shows counts that go up to 13, and those are in different colors. And your question is, what's more important for me, the 1 through 13? No, it's as each pattern is irrespective of itself. And what I mean by that, I don't know if irrespective is even a word, but each pattern is separate unto itself. Each pattern is a potential reversal pattern. And what I like to use is either some type of bullish or bearish reversal candle. But what I really like to use in trading those signals specifically is taking a look for whether or not that price oscillator, the difference between two exponential moving averages, the 19 and the 39, whether that is rising or falling. That is really what gives me the signal as to where price wants to go. And by the way, folks, if you're watching us right now on Tiger TV, this is the current December contract for the ES Mini. Just as we were able to identify in the Qs and the NQ what to pay attention to, the close here, if it's a below 2150.75 today, you'll have a failure, which means you will have a test of resistance and says that price can go ahead and move lower. Any close above it says price goes up to test this descending price channel, this little cone that we're in out there. With regard to wave counts, I'm trying to answer all of your questions, so you'll have to let me know how I'm doing out here. That is just simply a separate tool altogether. If I start doing my wave counts to the downside in the Chapman wave, I would be right out here at about 11 o'clock in the morning, looks like on the trading session of, in this case here, of September 22nd. And this becomes more of a question with regard, when you get to wave number 7, which in this case here would be letter G, you'll see I go ahead and give an 8th wave count. The reason why I show H is because I like to know when that price gets exceeded. It tells me that what I was looking for is no longer, it is no longer there. So this becomes a question, where do you start your next wave count? Well, there was a little bit of a bounce on the above that G level, so I just started right here, and you can see we never really got down to that 7th wave count. And what I like to look for there also is some type of bullish reversal signal. So we've looked at really, in essence, 4 or 5 different tools that we can use to help us identify tops and bottoms out here. And then there's one other tool that I'll share with you, and that is simply volume. And that is also with regard to volume and the Stevie's favorite lunar phase. There are only 2 lunar phases that I consider, when we take a look at the equity futures contracts, that I consider to be the most important. And that is when the moon is either closest or furthest from Earth out here. And that happens to be the red line that is on my chart out here. And if we go take a look at a 5-minute chart, and I'm coming back to the trading session of September 21st, because that is a level of support, folks. I'm just telling you, it's a level of support or resistance, depending on which side of the market you are trading on. But if we take a look at 12:15 in the afternoon, you see that price was moving down with volume. A nice big spike on a 5-minute chart. 38,000 contracts, a lot of contracts at 12:15 in the afternoon, doing what? Moving down into volume. So that was a big volume spike, was it not? Take a look at what took place out here at 2 o'clock in the afternoon. An even larger volume spike, and that was moving to the upside. Who do you think, from the volume standpoint, was buying? I'm not asking who was selling. I know who was selling. Who do you think was buying out there? Professionals or amateurs? Professionals. Professionals are going to buy when price is moving down into support. Fast forward to where we're at today. What took place this morning at the open at 9:30? Huge volume, 64,000 contracts as price was coming into support. Who was buying? Professionals or amateurs? It was the professional traders that were buying those levels of support. Alex, I hope that answers some of your questions.
Thank you, Steve. That was excellent. Thank you.
You bet. Thanks so much for calling. That was Alan in Newton, Massachusetts. Steve Rhodes, we'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. With only 4 minutes to go, I may not be able to get to the requests that came in, and my apology. That normally is not what happened. I would really try to cram those in right now. But, what's more important is, and I mentioned this during the show, is that you and I have an extraordinary opportunity that is coming upon us soon, which also suggests that we may have, and what I mean by that is, I'm going to go and take a look at these. We always talk about patterns out here. And with regard to patterns, the normal annual cycle pattern that exists inside the Dow. It's no different than fall. Fall arrives at a certain time of year, and so does winter. Some winters are worse than others, more harsh than others, and so forth. Well, same thing in the stock market. And the stock market typically finds a nice cycle bottom down in the fall time frame between, say, the end of September, which is now, and the middle of October. And there have been several, years where I've been on the radio. The market's been crashing down into October. I've called the bottom, and people have sent emails and said, "You're amazing. How did you do that?" No, I was not amazing. I was nothing more than just, extraordinary. All that I was doing was just take a look at the normal cycle patterns that are out there anticipated and look for one of those wave counts or price relative. One of the patterns that you and I look for to help us identify bottoms out here. Second-term presidents, they typically find a bottom in the middle of October as well. However, it may not be a second-term, fourth year of a second-term president that is the pattern that is in play. But if we do see the market move lower, and it would be no surprise to you or I if that's what was to occur, the bigger buy and the bigger opportunity is the one that takes place at the middle of October out here. And this we took a look at earlier, which is where the president of the office moves from a Democrat to a Democrat or a Democrat to a Republican. And that says that come that middle of October, we ought to know who it is that is going to go ahead and win the election well before you or I, maybe, assuming that you haven't done a early voting out there, who's actually going to go ahead and win. So what does that say? That says that there is going to be a huge upside move, likely in October, could begin November, depending on who it is that is going to be the winner of this election out here. If it's going to be Hillary Clinton, it says that bottom doesn't really form until right around Thanksgiving, okay, which would be November out here. But in this case, there's going to be we should anticipate a large upside movement. That's no different than this monthly chart right here. This monthly chart takes a look at the Elliott wave that's out there, which I think is hard and confusing, although when you take a look at a monthly chart out here with regard to the S&P, the Dow, the NASDAQ Composite, and the New York Stock Exchange, it's very clear with regard to where we are at inside those patterns. This says, if we in fact are in wave number 5 in the S&P 500, that we're going to have a move up to 2,500. That's no different than what you and I have been calling for the last couple of years out here. So this says long-term, that's where the S&P is going. It says the Dow is headed to 21,750 or so out here. It says the NASDAQ Composite headed to 5804. It says the New York Stock Exchange, 12,516. These are monthly charts. These are longer-term charts. You want to be on that wall, right? You want to be able to buy that next bottom that is out there. And look, that's the same pattern with regard to the market consolidations that have been busted out inside of the S&P 500, inside of the NDX 100. Until those patterns fail, they haven't failed here just yet. I want you to be able to prepare for that next very large bottom that should form inside these markets, because Santa is going to arrive sometime between the middle of October and perhaps the middle of November, and you want to be in on that buy. In the meantime, folks, stay tuned, because our favorite polar bear, yours and mine, Mr. David White, he's going to be up next. And as we do every Tuesday, you've got Tom O'Brien from 3 to 5, Andy Heck from 5 to 6. It's been great to be with you. We'll see you on wonderful Wednesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.